Hello, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a great trading session. And, I have to say, equities are looking a little vulnerable here. Sorry, I have Bitcoin up right now. I know. Let me go over to the S&P. So we're looking a little vulnerable, and I was drawing here a little bit here, but you can see we're probing some pretty big areas, in my opinion. The 3780, I know we've been kind of focused on that, but you see how we dipped down. We dipped down into the 70s and then bounced back real quick. We dipped down to 37.77 and then bounced a quick 10 points. I think the market's a little nervous about being on the short side, obviously, because you're not seeing any follow through here. But at the same time, I have to say, if I was long, I'd be probably more concerned knowing that we have a channel here. And I think what has to happen, let me get rid of this. What has to happen is you got to see a move below the 38% retracement that comes in at 37.67. So we're about 15, 17 points away from there. You really got to see that level get taken out in order for stocks to take notice. Because once you're below a 38% retracement, then you start, throwing out the idea that this is not going to be a continuation pattern, that this might be more of a consolidation. So I think that's what we have to see in order for stocks to really see, come under pressure. So 37.67, I know I was looking at this breakout point. I think this is starting to make the market look vulnerable, but what's going to really do the trick is, again, below here. All right. It's kind of what I'm looking at right now. Now, one of the things that, actually has my attention right at this very second is the US dollar Mexican peso is actually at its lows of the day. We have to get above, and we're developing like this wedge. I think it's a wedge, at least it looks like a wedge. When we might dip down to 1985, which would be the 618 retracement, which actually would make a lot of sense, because then we dip down here, break through this spike lows, and then then bounce. But I think that the dollar Mexican peso is going to be the currency pair to be watching for me, to know that equities are about ready to break down. Like, I'm not convinced that equities are ready to break down because I'm sitting here watching the dollar Mexican peso slide to new lows. If the dollar Mexican peso was, trading at 1995 or maybe 20, I might actually have a different tune. I might start thinking, hey, this stock market looks pretty weak, because I have other things that are confirming that would be the case. You look at the dollar Canadian, same type of situation. Why is the dollar Canadian down here? Why haven't we, started to build some steam going in the other direction? Why aren't we start moving? Why haven't we started moving higher yet? And I think that is telling us right now that the dollar is not ready to make a move, and stocks aren't ready to make a move yet either. They do look vulnerable. And I don't want to say that they're not looking vulnerable. They do look vulnerable, but again, I'm looking for a few different modes of confirmation right now. Let's talk about like the Aussie dollar. So the Aussie, we had this inverted head and shoulder pattern. I don't think it actually completed, but the Aussie is holding up a lot better than you would expect in a risk-off situation. If stocks were really that week, I think the Aussie dollar would be trading, below the overnight lows, which would be down here at 76.90, but we're not. We're 30, 40 pips above that. So the Aussie's holding up. The Kiwi's actually, not breaking down. So this is actually, I think, bear flagging. You look at the euro dollar. The euro dollar's got a flag going. It still hasn't broken down. I mean, you probably have to extend that out a little bit. So, the euro still looks like it's flagging. So, I mean, again, I'm looking at a lot of these currencies. They're not looking like they're ready to roll over. The dollar doesn't look like it's ready to start strengthening. And maybe it does need a push from the equity markets. Maybe if the equity markets start moving down, the dollar actually starts to firm. Oh, wow. Oh, I was thinking it was something else. U.S. to require COVID tests for all international visitors. So I thought I read it as U.S. is requiring a vaccine for all visitors, but no, it's just tests. Okay. That which I would find interesting. One of the other things that we should keep an eye on today is let's watch gold. Gold is near its lows of the session. I think gold is actually breaking a flag lower. Actually, whether it's this or this, who knows? But the gold market looks like it's breaking lower. That's pretty much it. Obviously I'm long some of these crosses, like I'm long the pound Aussie right now, which looks good. I think it needs to break above the 50% retracement here in order for it to really start to gain some strength. But the Euro Aussie, Euro New Zealand are just kind of languishing around. They're not really moving. I want to see the Euro New Zealand above 170, and then I'm going to actually add to my position. Those are kind of things that I'm just paying attention to, but I'd like to see stocks move as well. But there's something I wanted to talk to you guys about. If we're not in the chat room, you didn't hear this. So being in the chat room, or you might have heard me on the webinar today, on the Face webinar, say that we're going to be changing things up a little bit at the end of the month. And I'm going to tell you guys what we're doing. Okay, I'm not going to tell the people on Face. I'm going to tell you guys what we're doing. We are going to shorten the Face webinar every day. We're going to shorten it. Okay. It's going to only be an hour. So the first half an hour is going to be myself and, Stelio, Steve, Grega, whoever else is going to be joining in to talk about, kind of things we're looking at. After that, we're going to do our interview, which will, as Dale normally does, interview of whoever he's bringing on. That's going to go for half an hour. After that, Face It will be over and a new webinar will be kicked off or will be starting. That's what I meant to say, for ForexAnalytix customers only. So all of you guys that are listening in right now, you guys are going to be part of that group. And then I will do the bias chart and answer your questions only. Because what happens is during the Face webinar is, there's a lot of questions. I don't know who's who, and frankly, I don't want to answer questions. Some people that, ask them, it's like, are you a ForexAnalytix subscriber or not? And if you were, I'd be more than happy to answer your questions. But this way, you guys will only be privy to the bias chart, that analysis every day, at least in a timely fashion. People will be able to listen to the recording 5-10 hours later or whatever. But you guys will also be able to get the bias chart and get any questions that you have answered directly. So Rick said, will that start at 8 a.m. Central, the second hour? Let me think about what the times are. So right now we start at, what time do we start? I'm thinking about this. We start at 6. Is it 6? 6. So it's 7. So yeah, the 7 Central. So it'd be 6 Pacific, which is 9 Eastern. Yeah, so we start at 9 Eastern. So the second hour will start at 10 o'clock Eastern. So wait, is that right? So the second hour would be, it'd be an hour after when we normally start. So right now we normally start at, wait, 8 because I start at 6. So we start at 8. So it'd be 9 o'clock Eastern. 9 o'clock Eastern. That's correct. And it'll be 8 o'clock Central. So 9 o'clock Eastern will be the new start time of doing the bias chart with you guys. And I wanted to give you guys some time so you can think about it, like how you can make that work. And yeah, Gavin says 2 o'clock in the UK. Thank you very much, Gavin. So there's reasons for this, and as I said, is I want to make sure that you guys, your questions are answered, because you're our priority. I mean, you guys as ForexAnalytix subscribers, you're our priority. I want to make sure you all have the analysis you need to be successful. I want to make sure I answer your questions. If you're thinking like, oh, hey, Blake, what's happening with the Canadian? I don't get it. And you might be asking during the face webinar, but your questions don't get answered because there's so many questions and we don't know who they're coming from. Look, I just want to make sure that you guys are taken care of, because that's all I really care about, to be honest, is you guys and gals. So there it is. I want you guys to think about that, because I want you to have it in your minds, so you understand what's happening, so you can adjust your schedules accordingly, that type of thing. I just want you guys to be thinking about that over the next couple of weeks, because we're going to kick this off right at the end of the month. Let me see, that would be February 1st. All right, guys. I am out of here. And oh, by the way, before we go, just one thing. So let me just reiterate. Only thing I really care about today with the S&P, or honestly, is with the S&P, is below this 3767. It's the 38% retracement. While we're above that, I'm not in the camp like, oh man, this market's going to dump, blah, 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 blah. No, I really, really would like to see, we're probing, and it is becoming a little dicey if you're long equities, but I think this is where the rubber meets the road. And this is where things start to get a little bit more interesting from a risk aversion standpoint, would be below there. Okay. And that's what I'm just trying to focus on. Try not to get too carried away trading this, that, and the other thing, because it's choppy out there. I don't want to be, I'm trying to, like you, avoid getting whipped around. All right. Have a great day. And thank you all for your continued support. I appreciate you all, and have a great day. Talk to you soon. Bye. Thanks, Brock, Gavin, Jason, everybody else that had made comments. Talk to you soon.